Traders, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar. And let me know that you can hear me and that you can see the chart. And right, you should be looking at US dollar weekly chart right now. Test, test, test. Please let me know that you can hear. Sounds good, says Wheel. All right, great. So, US dollar. Still think we're looking down here. You do have the election low about 100 points lower. That's probably going to be, you can see right here where that is, right? On the daily chart. So that's probably going to be the first, or where I would guess that you get, something as far as a bounce is concerned, right? Now, there is this parallel, right, from the low from May of last year. And you can see that you do cross through some pretty big pivots. So, it's never as easy as just dollar up against everything, dollar down against everything, right? For the most part, the dollar's been declining, but the yen has also been declining. And I actually think that today marks an important pivot in that trend. I think the yen is going to start to strengthen. In other words, dollar yen is going to be lower. You'll see that thinking as we go through the charts. As I wrote last night in the update, I think that this big breakout in the euro is actually going to deceive a lot of people in the sense that you'll get a lot of people, chasing the euro higher. However, they're going to miss the boat on things like the Australian dollar, Canadian dollar, which is already in full-on kind of crash mode, dollar CAD, and even the pound, right? So I think there's better longs against the dollar than the euro at this point. The euro's had its nice time here in the sun. It appreciated, for the first half of the year, albeit fairly slowly, and started to accelerate here lately. But yeah, we're going to, I think, see outperformance by some other currencies, even against the euro. So let's get right into it. So US dollar, again, still lower, new trend lows here for the year. You've got to love the psychology of the marketplace, right? You had, in January, we had the euro was doomed and the dollar was going to freaking high heaven, right? Here we are now, and the euro's short dollar is a pretty popular trade. Latest COT report, actually, right? The speculators have sold the hell out of dollars here lately. So I'm not sure how much juice is left in this. Could get end with a bit of a bang. Another part about this, which is important, is actually TLT, right? Treasuries. If you look at the TLT chart, the ETF chart is actually very clean. So this has been the fork, right, that we followed for some time here. And you can see, I guess, maybe it dips a little bit lower, but essentially this right here is the retest of the breakout, right? And this parallel has been really good support for TLT. So again, remember what this is, right? This is the bond ETF. And, as this goes down, it means interest rates are going higher. Okay, so it would make sense for today to be a pivot and get support in the bonds, which is really the main driver in dollar yen. If we get a full-on blowout in the bonds, you could get all up here to 133. It seems like a stretch, but it is the 618 of the drop. So if we get up there, big pivot, that might actually correlate with a bigger dollar low. But yeah, bottom line, you're at support here in the bonds. Not saying you can't dip a little bit more, but this is support in the bonds right here, okay? Euro, spot on here, and this is saying, it's been following this for a while, this is saying that the top for at least a couple months is probably due next week. So, you know, I've got some levels. I guess the post from 2 days ago, we had some levels that we were looking for in euro. You know, the one, what was it, 114.60. This is the chart we've been looking at. So 114.72 is actually the measured move from the range. Okay, so it's essentially your classic breakout target. Now, you can see the magenta parallel, right? This is the upper parallel, which also marked the top back in June, or I guess June 2nd, beginning of this month. And that is higher. So let's just say, for argument's sake, that you got there tomorrow, it would be just above 115. And so you'll notice, you know, in the update right now as it is, I've got a target for this long saying at least 114.60, right? And 114.60, simply, if you look across the chart, right, you can kind of put a line up here at 114.60, and it's really been a big resistance area since May of 2015. So, you know, it's more or less the top of the range. And I say at least 1460 because of that level, but again, we could stretch up into the 115s, right? And I'd be comfortable getting out there. So, you know, when it lines up, and you know, I'll put the target up there at the level I think is going to be best. Go down to the shorter term chart, and just how beautiful was this breakout. You have the whole Draghi like misinterpretation, whatever, you know. I mean, all this stuff is just such bullshit, and it comes right into the level. I mean, to the tick, it hits this thing and just rockets off to the upside, right? So this is a level here. Not again, the target's higher. I still think you can get a little higher. Not a place to buy euro, but you know, to get out of a long would be the spot. But yeah, you can just see how beautiful these parallels do work. And really, you know, it's just kind of a retest of the horizontal level too. So let's keep our eyes on 114.70, maybe, you know, a little above 115 before before getting out of this trade. 114.89 is also the I think it's the 10th square root progression on the way up. Yes, it is the 10th square root progression. So that is a good looking level up there as well. You've got cable. So cable, if we go to the longer term chart, just for perspective, not in this yet. I do think that the next dip is going to be the buy for cable. And this blue line here, this parallel, is probably going to be your best spot to do it. You know, not as clean as the euro parallel, but you know, it's pretty close. I mean, I guess we could, you know, just really good inflection points, right? So back here, up in here, up in here, up in here, low from 531, and then of course the high from 614. So I do think, well, I shouldn't say I think because you never really know, but this is the setup in any case, right? Is you get a dip right down to here. Maybe it happens next week. I don't know, but it's going to be around 129. Okay. And then you're going to want to be long into there to take you up for at least a test of the highs and probably a little higher. Might be up here near 132, which is the parallel that goes off all the tops up here. Okay. So, maybe we're getting out of the Euro longs before this pullback and then trying to take, buy the cable dip. You do have dollar yen, excuse me, I believe is actually a short right here. This is the trend line from the January high, it says it right there, and do think that we are putting in a top in dollar yen right here. Not sure, how important that top is, because again, on the longer term chart, you've still got to 618. This all could be, you could have a triangle going on here if you get these 618 legs, the alternating legs. Let me see if I can put that in here. I guess if you got another drop, you can get back to 109.50 potentially. But yeah, so we're putting in a 4-hour reversal right now. Again, that 4-hour bar is going to end in 2 hours on dollar yen. You can see all the 4-hour reversals, right? Some obviously work really, great, and some are kind of false. But for the most part, it is a pretty good signal, especially when it's on a trend line like this. So I would look for this to gather pace on the downside in the coming days and weeks. And on that note, you've actually got a seasonal top due right now in dollar yen. Okay. So as we head into July, you can see here that's actually August is up, but July has actually historically been, at least over the last 5 and 10 years, it's actually been a pretty big down month. All right. So we have the seasonal top coming up here for the dollar yen exchange rate. And again, this all makes a lot of sense considering that you have the bonds coming into support within still an uptrend. Yes, very late in that uptrend, but it's still an uptrend. Okay. So do like transitioning into a dollar yen short position starting today, basically now. So let's see what the short-term count would look like here. First leg down, little bounce. Okay, so that's a dollar yen. Look at the long-term chart real quick here. We didn't really take a Sarab asking about gold, silver, copper, oil. Yeah, we will definitely take a look at all that. Yeah, so here's your longer term chart. If I actually go log on this, remember the level we were looking for so long was the 135 area. Could get there, but I don't want to overstay the welcome. Again, I think all I know is that 129 is a buy, right? A pullback into 129 is a buy. And if it takes you to 135, fine. It's a huge level. Probably want to be a seller up there because you could get another downturn from that point, right? But we'll follow the daily slope to really get us in and out of these things. Yeah, trend line up at 132 and change. Yeah, nothing too extraordinary there. All right, we'll move on. All right, so what I really want to talk about is the Aussie. The Aussie might be about to go ballistic on the upside here. So we are testing the level. Okay, here you are. This is huge. And again, A, B, C, D, E, B wave, and Wheel saying, what are you looking for to enter the trade on dollar yen? So, all right, let me answer that before I go through. Well, essentially, you could just go short now with a stop over 113. But as far as a concrete signal, no high volume levels down here. That's okay. As far as a concrete signal is concerned, you could wait for the 4-hour candle to close on the reversal, and then just simply put an entry at 112.60, which is your hourly close. Okay, it's also pretty close to the trend line. So again, would wait at least for a concrete signal. Would wait for the 4-hour to close, which again is in an hour and 40 minutes now, and would then just put an entry at 112.60. So I may just tweet that out, assuming that we get the 4-hour close on the reversal, right? It's just kind of how I like to wait for it. But that's my best answer there. But again, I like it lower. I think that you're going to be heading lower for a couple weeks in dollar yen here, right? Bonds as support. Does look like the finally you're starting to get some cracks in the market here. The general market. You've got the Nikkei up at resistance as well. Yeah, beautiful looking dollar yen chart. Here's the Nikkei at resistance. Okay, it's kind of been, and you have this wedge-like thing going on, right? It looks really tired. It's the kind of thing that reverses hard. Okay, so I will be looking lower here, and maybe fairly significantly lower, right? If we look at here's a long-term channel going way back. You could get back down towards this lower channel because you do have 5 up. It would contribute in my thinking to a much larger base. Is that about the center of that channel? Probably something like this. So it would make sense if you turn down here in the Nikkei. Okay, so the Australian dollar. Here we are. And we had talked about a question on Twitter asking if this was 1, 2, 3, 4, 5. It could be. It's a possibility, right? That you do have 5 up and that you're going to get a pause. However, this thing is so contracted that I'm not willing to try to be, I guess, that cute. And I just want to trade based on the slope here, right? Which is accelerating. So we've come up to what was our target course, we were stopped out before that as we trailed it higher, but the momentum characteristics of this move, and by the way, this is still a buy down here on the blue line. It could be a bit higher than what I have entered as the order, but so it could be something more like 76.35 or whatever. Okay. 77 and change is going to be potential resistance, but really you just want to kind of trade within this slope. Okay. And the momentum that I mentioned, the reason that you could be actually headed higher now. So one of the things you look at to confirm a wave count or help you understand it is the momentum characteristics, right? The third wave is typically the strongest, and you get kind of a petering out or a divergence in the in the fifth wave. Well, so if this was actually your third wave, then what you would have here would be you would want to see a momentum reading. I like the 4-hour charts, but you would want to see a momentum reading greater than what you have here, and that's not the case. RSI here was 75.98. RSI here is 76.61. So we have a higher momentum reading right now than we did over here. So that's one reason to think that you might not actually have 5 up, and instead you could have something extraordinarily bullish, something like 1-2, 1-2, or or what have you. Bottom line, you could get a breakout sooner rather than later. And in this case, I think there's an opportunity cost to not having, to not buying into a support level, right? And just risking that, whatever it is, 50, 70 pips or whatever, in order to get in on this, because it could be something that is about to really explode, right? We're talking about an A, B, C, D, E, B wave. Your C wave is going to carry you up to the mid 80s. All right. Not saying that you're not going to see pullbacks before then, obviously, but it's worth, taking a shot rather than thinking that you have 5 up and you're going to get this bigger pullback. So that is the deal with Aussie and why I would want to put in, or why I keep an entry, at elevated, rather elevated levels, right? Rather than trying to get too cute and calling this 5 up. Now, look, if it is 5 up and you get a bigger pullback, then fine, and we'll get in, even better levels at some point. But as it is now, I'd much rather be kind of almost chasing, right? Rather than thinking this is 5 up. Just my thought. Okay, that is Aussie. Kiwi, really quite a bastard here. So continues to kind of struggle up here, right? I mean, I guess in this environment, it's tough to be, long the dollar, right? So Kiwi is weakening, but not really against the dollar, so it better probably on crosses. I mean, Kiwi yen could be a decent short up here. Finally, it's really extended. So maybe you want to look at Kiwi on the crosses. Maybe that's the place to do it. Right? I mean, we had a chart earlier in the week that said Euro Kiwi might be the trade, right? My thinking now is it's probably going to be a good trade, but you probably have better ones, right? Aussie Kiwi might finally be ready to freaking do its thing. We came into the year open. What was that? That was Monday. Yes, Monday. Year open Monday. Kiwi reversed across the board, and now you're finally starting to move higher. So this might be finally, for once and for all, after basically 3 years of thinking that Euro or Aussie Kiwi was higher, might finally be time to just bite the bullet and take the damn trade. right? So in this case, you have a pretty good reference point for Aussie Kiwi. If you get that pullback in Aussie or whatever, maybe we get 104.74 month open. But again, the month opens or the month ends tomorrow. So second half of the year, which by the way is also a very good time for changes, rebalances, and by definition, changes in underlying market conditions, right? The NASDAQ is more or less crashing as I speak. Here we are down 111. And that's probably a chart we should look at here in a little bit, and I will. But first, let's look at dollar CAD. Then we'll look at the NASDAQ. Then we'll look at the metals. So dollar CAD may have kind of screwed this up by getting out, but the chart's the same. Any sort of consolidation, sideways bounce, couple days here and there, whatever. Probably going to be looking for resistance back on the third, this line here. Beautiful touches there, 30.80, call it, and then even up to around 131. Okay, which is just the very, very, very long-term parallel that we haven't traded below until just now. So, yeah, big stuff here. Any sort of bounce into this region is a sell, and would be looking for basically continuation down towards the 2650s or so, which is just the next parallel from this possible structure, right? You can't say that a median line structure really is in play until you touch the median line. But in this case, they are so clean, this trend line, right? Touch here down in January. And what did we say I think it was a couple weeks ago. We said this could be a structure that is in play for literally years, and I don't say that lightly. It could literally be years that this is in play. Okay, we could be trading on this eventually down to this lower parallel, but it could be in play for a long time, right? Just like this structure was essentially in play for a long time. Okay, I want to show you the NASDAQ. So the NASDAQ is getting hammered right now. Where are we? Down 112 points. So let's see here. Yeah, the NASDAQ of any market, the NASDAQ is down 2%. It's the most. Biggest gainer, sugar, wheat. Currencies, dollar MEX, upside. Okay. NASDAQ futures. This is a case study in slope. Okay. Go to 60-minute chart. Just a simple trend line, 75 line support all the way up to the 25 line and right back down, and we're going down here, and if you break below this, it's really going to crash. Okay, so you can take it as a market opinion if you want, but this is a great piece of education right here as far as what to really watch for in markets, okay, and really how they do move. And if you were to get some sort of a crazy snapback rally, okay, which a lot of things I would not discount in these markets, this is going to be resistance on the median line, okay, and it's 5,700. So yeah, this is pretty nasty. If we look at the Qs, so that's the ETF on the NASDAQ, you can see it's the same thing, right? But just looking at it on a daily now, and you still, the big test for this is going to be down here on this trend line. Just this is a trend line back to the Brexit, actually. Right here is Brexit. And yeah, there's your trend line, and that would take you down to 134 or so. Ooh, it's looking panicky down here, isn't it? Okay. All right, so that's the Nasdaq. All right, so let's look at the metals, right? You wanted to look at crude. We got silver, copper, gold. So if you're a gold bull, probably not a good sign that, this is supposed to be a safe haven or something. Probably not a good sign that the market's not moving higher amidst this, bear action. And really, I guess it's concentrated in the Nasdaq, but let's look at gold based on its own chart. So this is what we've been following. I can't be positive on gold, guys, until you break up through, I would say, the 1260s. Right? Just can't do it. Okay. This is just, it's pretty simple. I mean, you do have the possibility of a base and an uptrend, but gold's not acting very, very good. It's just not, right? It's kind of that simple. So I guess you could make the case that you've got a 5, 1, 2, 3, 4, 5, A, B, C. So, you can make the case for it for a higher gold price. But you got to hold this low, right? Got to hold 1236. It's not especially clean. It would have been nicer if this flash crash deal would have taken you down here, right? That was last week. I was talking, or no, that was Monday, I guess. I was talking about this, and I said I'd like to see a low down here on 1230, 1231. But just never got there. So, it'd been nicer if you got a kind of a panic low down here in a rip. But we did get 5 up, so when I look at that and see the 5 up, that makes me, I guess, at least respect the potential that you could go higher. But you'd really like to see, gold get up out of this trend line. If it does that, then it's a bull. Until then, I'm skeptical, albeit respecting the potential for it to move higher as per the 5 up. Okay. Other than that, though, like the daily chart pattern is really not all that clear to me, right? Like here's a weekly chart, gold futures. You have the trend line. It's seemingly been trading on this thing forever. We've been trading around it essentially since Brexit, right? So, it begs the question: is this a false break higher, or are we finally about to move? And I will say that you do have the gold seasonal bias does turn up right now. Okay, so let me put that gold chart in here, and that would make sense given the the seasonal thing with Japanese yen here. Okay, so you can see here we are, right? We do turn up in gold. This is 30 years on the red, but we do turn up on gold. So, July historically, pretty good month. August historically is a really good month for gold. So I would, I'll leave it there too. That, that's a positive sign. Okay. But based on the price chart, I've really got to see it get up through. You've really got to see it get up through the 1260s. That's the test for me. Okay. It's really the test. Alrighty then. What about silver? Silver's kind of, similar story here. Here's the weekly log chart. Positive in the sense that, yes, December 2016 was down here. Would be more positive. Would be more positive here. Will saying, isn't the hesitation on gold, all the hawkish talking rates from central banks? It may be. Here's the thing, though. So if we go into a true inflationary environment, you are going to see silver outperform gold. You are probably going to see copper outperform silver, and you're going to see things like iron ore outperform all of them. Okay, and that's why there's a fundamental case there to be really super bullish on the Aussie. Okay, remember we talked about this a long time ago. Actually, I'm going to change subjects here real quick. But when you take silver, okay, so watch this. I'm going to take silver and divide it by gold. Okay. And I'm going to compare this with Aussie Kiwi. Pretty fascinating, right? By no means would you trade based on this because there's massive periods of time when you go out. My point being, though, if you're getting a massive low base in Aussie Kiwi and you're getting a massive base in the silver versus gold ratio, both of those ratios, and every currency cross is just a ratio, but both of those ratios advance or indicate or a signal or a manifestation of inflationary pressures. And it would make sense that Australia would go up against New Zealand during a period of inflation because you have more exporting of raw materials and whatnot from places or from Australia, right? And silver would outperform gold in an inflationary period because it is not just a precious metal, but it's also an industrial metal. It's used for things, right? Gold really is not used for much at all except for store of value and jewelry. But so to me, this chart here signals potential massive bullishness, maybe not for gold itself, but silver relative to gold. Okay. So this is a very important chart as we head into the the second half of this year. And I love seeing the fact that you have this weekly channel here. Okay. So remember the first low for silver was back in February of 2016. That was really the big inflation low. Okay. The second low might be right now. Might have happened this week. All right, and then let's look at copper. Copper. Copper looks really good. It's going for another test up here, up at 274. Here's your daily chart. I mean, this is the chart. How long have we looked at this thing? Forever. Every time it comes into here, it's a buy, right? Every time it gets up here, it's a sell. It's like Aussie right now. So you have resistance. If it breaks higher, you're going to go a lot higher, probably up to north of 310, because that would be your next resistance line. But yeah, it's been a basing process. It's slow, right? Up, sideways, up, sideways, up. So remember 1, 2, right? 1, 2, 3. So this is 1, 2, 3, 4, headed higher in a fifth. Crude oil. Crude is acting well. Two levels, 44.10 for support, targeting 46. That's obviously that's short term, of course, right? Bigger picture, I would just kind of follow the slope here, but bigger picture, you're probably looking up towards 50, which is just the upper channel line. I'm using the highs from April and May, so 412, 524. Srab asking about buy levels for copper. So let's look at, see if we can get okay. Let's go to the volume charts here and see if we have anything interesting. Entry possibles in crude, so that's Karthik. I just 44.10 is support to buy in crude. 44.10. All right, so your last volume level down here. To be honest, folks, here I'd look at, because you've already, here's the daily chart, right? I mean, you've already rallied up into this level, right? So when you're asking me what are the buy levels for copper, I'm like, well, it was on support down here. But I would just, looking at this, it's a lot like Aussie in the sense that you're testing this big level. And I just look at the recent highs, right? So if you get a dip from here, which is like, this is longer term resistance right here. If you get a dip from here, then look at 265.20 in copper. And this is copper futures. So look at 265.20 in the futures. Okay. If this is some sort of a true breakout here, then this is support. Alrighty. Some of these crosses, talked about these last night, right? So euro pound. Again, short could be interesting, but I'm not like dying to short euro pound. maybe I should be, because this is looks like an A, B, C, and this is 5 down, so that means that you're going to get something really nasty on the downside. I don't know, maybe Euro's bearish, but this to me just says be more pound bullish, right, on dips, rather than just being outright bearish Euro pound. But again, this is a pretty good looking chart. So you do have the reversal, hasn't really followed through today. Euro Aussie, beautiful looking chart. This was from last night. Again, I like to work from the chart first and then make my conclusions. But you can see the top is on the 618. Slope off this high was resistance here before the final thrust. 5 down, 3 up. Super bearish Euro Aussie, which is really bullish Aussie dollar. So I like this lower too. But again, you want to trade this or you just want to be long Aussie? That's, it's fine too. Euro CAD. Slope's working well here. More or less support on 75 line. Got resistance on the 25 line. Looking for resistance up 48.95. Pretty much got it. High last night 48.88 this morning. But yeah, this looks like it could be getting ready for another leg down too. Right? So again, all the cross charts to me in this environment, which is obviously a dollar bearish environment, probably going still lower in the dollar. But remember, every currency's got to take its turn. And so these charts just to me say it's probably best to maybe be more on the side of these other currencies rather than the euro right now. So even though the euro can go to 115 or whatever, you're probably going to be better transitioning into Aussie CAD, pound, and Japanese yen for that matter. So euro yen, which has gone ballistic on the upside, just absolutely crazy on the upside, right? So does that want to go for 2 legs up, which would put you at 29.35? What's this fork look like here? Well, that's interesting too. You've taken out this level here. I'm looking at this because this said, if we think that euro could be coming into some sort of a peak, at least for a couple months or something, and you've got yen in this very positive environment for a negative dollar yen, pretty big spot historically, right? I would hold out for another 120 pips on the upside though, just because that's half down and 2 equal legs, and lows here and all that good stuff. So not quite there yet, but relatively soon, one would think. Basically 129.65. Okay. So here's a quick rundown. Euro, still like it higher. We're getting close to a top, maybe near 115, targeting that area. Pound, like to buy it on dips around 129. Dollar yen, I think we topped today. and I like it lower. Aussie dollar, it might be about to explode and go to 85. I would buy it at 76, anywhere between 76.25 and 76.40. That's how the orders will be handled later today. Kiwi, I hate it. I think Kiwi's at a top, but against the dollar, it's kind of tough. Either way, probably best to be on the other side of Kiwi, so I would look Aussie Kiwi higher. Dollar CAD might be going to 126.50. Would want to get back in the short side and correct my mistake of getting out of that trade if it got back up to 130.85 to 131. So basically sell dip. NASDAQ looks like it's about to crash. TLT, the bonds might have bottomed today for another leg up. Gold, very unclear. Possibility that it goes higher because you have 5 up on the hourly, but I need it above 1260s and holding before I'm bullish. And it probably is a better trade to be long silver anyway because the silver gold ratio is putting in a wicked long wick today and looks bullish in its own right. Crude, buy it near 44, first target 46, and then see if you can get 50. So there's the rundown. Okay. That's it for me today, but I've got a couple minutes left if anyone wants to ask a question. Pound yen. Sure. Mahai asking the stock market has it topped. Well, that's a very broad question because you have many stock markets. Here's pound yen. Interesting. We talked about 146 the other day, and we've actually come into it. In fact, we went to 46.50. So pound yen is going to be a buy somewhere, I would think, within this structure. And don't forget, too, about this setup, which is coming into the top of former channel. So looking lower for a little bit here. Again, guys, I like dollar yen lower, so I'm not sure the crosses are the best place to play. I'd buy cable into 129. Mahai says, let's say the S&P 500. So is that topped? I don't know. I think the NASDAQ's topped. I think I showed you this chart, guys, last week. But this is the QQQ, so basically the NASDAQ divided by the S&P 500. Tech bubble, 5-wave drop, channel, a rally that lasts for 15 years, almost to the day. We bottomed in June of 2002 after the tech bubble. And guess what? We retraced 61.8 in this ratio. NASDAQ's topped. I don't know about the S&P 500. Let's look at the S&P 500 though. So SPX. Put it this way. You're a lot closer to the top than you're not. We thought maybe 24.80.90. I think it's a short. I'll say that. Okay. I think your real break probably comes on a drop under 23.90 or so, because that's the trend line that you've basically been on all year. This is basically your 2016 trend line, or 17. Sorry, the last day of 2016 into the low from April. People got scared here, went higher in May, and now we are, we kind of pressed the channel. So below here, that's your first indication that you've really topped. Okay. So Karthik says pound yen went long at 45.77, so that's basically now. Well, I actually think that you're going to go lower in pound yen here. Okay, again, a couple of weeks ago we talked, or a couple of days ago we talked about. I said you were higher, look to buy it down here. We never got the entry, but we went higher. 46 was resistance because that's weekly reversal level, and we've gotten there now. So I would not be in that trade. In fact, I think that you're probably going to see a nasty drawdown if you're in that trade. Okay. All right. All right, folks. That wraps it up for me. I've got to run. I'm going to get this up and archived ASAP and be on alert for an entry short dollar yen coming up here. All right. All right. Thanks. Take care.